Hello and welcome back to our weekly tea break here at the FT Studios in London, alongside my co-host Yuri Bender. Joining us this week is Louise Tumchewics, an author and visiting fellow in the Department of War Studies at King's College London. Her research focuses on war and technology. She has advised numerous international organisations and financial institutions. Louise, how are you?
I'm very well this morning, thanks.
And what tea have you gone for?
Well, Ali, I have gone for a classic English breakfast tea with a splash of milk because in these volatile and rapidly changing times, we need to keep calm and carry on.
She's right. We need to keep calm and carry on. But I'm thinking about the standoff between the geopolitical powers, and we've got the Great Tea War as well between China and India, which has been going on for centuries. Which is the premier tea producer? And obviously, there's a lot of focus we've got today on these rising powers, and we've just entered the year of the snake, and we're running a very interesting article this week from Zhadong Bao, manager of the Edmond de Rothschild China Fund. And he's drawing our focus, Louise, to the six tigers of Hangzhou, which he feels will rival the magnificent seven eventually. And President Trump talks about the Chinese economic threat constantly, but most family offices pulled out of investing in China a long time ago, a couple of years ago. Do you think they're going to come back eventually, these investors?
I think we have to look really at the geographic spread of family offices, because family offices that are based in North America or Europe may very well stick with this preference for staying out of China. However, family offices in Southeast Asia and family offices in the Middle East, where we're seeing sort of the largest growth in family offices, they may well be attracted to the strong performance of Chinese tech stocks, provided that trend continues.
And Ali, you've been looking at China as well, particularly the startups of Hangzhou, Shanghai, and the Pearl River Delta, a vital area of economic growth in the south. Do you feel these hubs will give Silicon Valley a run for their money in the high-tech space?
The startup scene in Shanghai, Hangzhou and the Pearl River Delta are gaining prominence, and they could give them a run for their money. And we saw with DeepSeek's success, that really highlighted that shift. Shanghai has overtaken San Francisco as, in terms of unicorn potential. And a lot of this is down to kind of China's planned economy, its government support, and its emphasis on domestic innovation. Has China turned inward like the US, or will its economic warfare associated with the Belt and Road Initiative, building infrastructure across Asia and Europe, soon be revived?
Since spring of 2020, they introduced their dual circulation policy, and that was really aimed at strengthening the Chinese domestic economy, increasing trade amongst major Chinese cities, increasing trade with their near neighbours, really as a buffer against trade wars, economic competition, tariffs from the United States. So they were anticipating more difficulty in trading with the United States. Of course, the dual circulation policy was perhaps overshadowed by the introduction of COVID-19 in the spring of 2020.
China is also increasing its influence in the Middle East as well. And the first time when I started going to the Middle East in the early 90s, I certainly never saw any Chinese people there. But my last visits, I saw a lot of Chinese investors and business people. And Ali, you've been writing about the Middle East, about the shifting sands of the various alliances in the volatile region. Do the experts that you've been speaking to see good prospects for the region economically, despite the political instability?
Yeah, we've seen a lot of significant changes in the Middle East over the last few months. Power shifts in Syria, for example, the fall of Assad. Some of the experts I spoke to saying Saudi and Turkey gained from that. We also have the war in Gaza as well. Private banks also see some sort of potential in kind of non-oil sectors such as tech, renewable energy and tourism, driven by economic, diversification, especially from the UAE and Saudi Arabia. Real estate and bonds are also well positioned for growth, according to some of the private banks, with demand from foreign investors. Who will be the leading geopolitical powers in the Middle East, and kind of how will they reshape the region?
I think what we've seen in the Middle East just in the past few months is this remarkable regime change in Syria that happened relatively peacefully compared to, say, the regime change in Iraq in 2003. And we've seen the transformation of Jolani from a warlord to a Western-suited politician. Consequently, with the fall of Assad, we've seen the diminishment of, say, Russia's prominence in the region, and with the fall of Assad, the ceasefires with Hezbollah and Hamas, the reduction also in Iranian influence. So then who fills that? Who fills that space? We see for Turkey, that's good news, for Saudi Arabia. So I think we could see a shifting dynamic where if the Middle East remains somewhat more peaceful, perhaps with the exception of Gaza, we'll see what happens this week, that other investors are interested in the region, and in not being Western investors, there's perhaps more interest in talking to a different audience, different voices.
I think what's been particularly interesting in the Middle East, Louise, and you've alluded to it there, has been the influence on big families in the region, which traditionally, there's been 7 or 8 families who've really run a lot of the Middle East. And the Assads obviously were one of them. That dynasty seems to have collapsed. The Saudi families, very important. And if we look at pre-revolutionary Iran, it was very much a family-run regime. And the region is still so influenced by these families and clans, which very much wants to control their destiny, their legacy, their brand. And my colleague Elisa Travato has been writing about how families try to manage their future and spread a narrative. Do you feel that the Trump dynasty works in the same way? I mean, the Trump Inc. it's really the ultimate family office. They're trying to reshape the Middle East through basically real estate deals, overseen by the president and his son-in-law, Jared Kushner, who's long been talking about this plan to redevelop Gaza as a luxury seaside strip, provided he can first relocate the Palestinian residents. Is that the way they see things?
If we think of your typical family office, they're very discreet. They're investing for the long term, thinking in terms of generations instead of possibly even centuries. They're looking for stability and longevity, and a managed amount of risk in their investments. And then let's contrast that with the Trump family. Discretion probably isn't the word that first springs to mind. And their investment horizon is really an electoral cycle. So they're looking a big win in the next 3.5 years. And their family fortunes perhaps gone through far greater instability and volatility than many a family office would find comfortable. But they made their fortunes originally in real estate deals in Queens, New York. And they are looking at the Middle East from exactly the same perspective.
Right. And Louise, when we think about the capture of countries by economic actors, we have an article this week from 2 partners of the Caton Mukin Rosenman law firm in New York, which suggests that the crypto crew are about to take over Washington, that President Trump's fortunes are intimately tied up with the crypto world. Louise, do you feel that we sometimes underestimate Bitcoin and other crypto assets and the influence they have on the global supply chain, politics, organized crime and trade, both legal and illegal?
Ali, I would say that we often underestimate it, particularly in the circles that I am often in, because there's a lack of comprehension about that asset class outside of the wealth management sort of financial sectors. People are familiar with the term, maybe have a superficial understanding of what it involves, but don't understand it in depth. And so often are looking at economic relationships from a very traditional viewpoint, and maybe not taking into account the movement of money through cryptocurrencies and its consequent influence.
And we've got a question one of our readers has sent in on this topic. Alexander Bukowski, a partner at investment firm Veduta in the US, he asks, this current trend of family offices and sovereign wealth funds to invest in and accumulate cryptocurrency assets, how important will this become in the industry, and will it influence the broader market as well, because people are taking such big positions in crypto?
But I think from your interview with Seas Bank last week, referenced the fact that the next generation of family offices is looking into cryptocurrency and developing a crypto product from that. There's a lot of curiosity and interest in exploring cryptocurrency. What I think that does is when you have these very established, trusted names looking at cryptocurrency, it lends cryptocurrency a greater legitimacy and makes it much more mainstream than something that otherwise could be thought of as a Silicon Valley hobby or is used by sort of a shady underworld. It brings it to the forefront, and consequently that will have influence in the wider market.
And I'm glad to see that your analysis of these trade patterns, Louise, it's being recognised more broadly because you won an award in Paris at the Naval Conference there for your research paper on the ability of navies to deter threats on the maritime economy. And I'm going to ask you very briefly, I know this is a question you could spend hours answering, but we've been talking about technology, about electronic payments, about crypto systems, and obviously data centers is something we write about a lot, and investments in those and the widespread digital infrastructure. Do you feel that despite all this technological progress, the geopolitical focus will still be on really protecting the maritime choke points, the channel from Odessa in Ukraine to the Bosphorus Strait, the Panama Canal, the Taiwan Straits, the Straits of Hormuz in the Middle East? Are these essentially still more important than the digital highways?
So when we talk about the maritime economy, we have to look beyond just what is happening on the surface. 90% of the world's goods move by sea. We rely on the sea for the vast majority of trade. So when there is a disturbance in critical choke points for trade, that has a real impact on the global economy. You can see why, therefore, naval vessels, say, were deployed to the Red Sea to escort ships through and provide that protection and provide some deterrence against continued strikes on ships. However, before any of that trade can take place, financial transactions have to happen. And financial transactions, worldwide financial transactions, rely on a network of undersea fiber optic cables. So protecting the maritime economy is not just protecting what's happening on top of the water that's visible, but it's also protecting that undersea infrastructure.
Thank you, Louise, and hopefully our readers will carry on shipping in all these questions.
Definitely, yes, Yuri, definitely. And massive congratulations, Louise, on your award.
Thank you.
And thank you so much for coming on today. That's all we have time for this week. If you have any questions for our guests, as Yuri just mentioned, please send them our way. For more information, visit the PWM website. We'll see you next week.